Good evening. Good evening, fellas. How are you today? Actually, I just I restart. Earlier today, I said I will not do a uranium update today. Uranium has done well today. I'm not gonna. It's doing great. But then I saw the URA chart here, totally naked, and personally, I think we are on the verge of the resumption of the big third wave up from here. And I just want to briefly show you how I think what is about to happen and where this could take us. A little bit of history for the new guys. Maybe some of you, old guys that again just want to see this again here. So let's take the history here. I might repeat myself from time to time here, but I've been a uranium bull for 4 years now. Actually, yeah, 4 years, 4.4 years and 2 months, basically, roughly. And yeah, it's gonna be one of the those investments that will give you a ton of gray hair. At least I can see mine is coming out a little bit. That may be due to uranium, but also the wife and all that. But shh, don't tell her that. And and yeah, so uranium again, I'm hugely bullish. You know that. And it has been really tough. But I do think we are at that moment in time where, hey, next big move is just around the corner. But first, some history. Unfortunately, this chart only goes back to 2011. We had a peak in 2007 or 8, 7, I think it were, yeah. And now that I think of it, I might use GPT to make me that chart going back. Maybe I'll see what I can do. Anyways, what we have here is the big Fukushima gap. And I assume that everyone knows what happened, what the Fukushima gap is. That is basically the tsunami in Japan. Not only Japan, but again, it basically destroyed, or at least had a reactor. Uh, it didn't blow up, but again, it was a little bit of a mess, and that was definitely a huge kick in the face to the uranium, where the entire Japan, the country, started to to basically stop all their reactors, and basically go away 100% from nuclear. And at that point in time, Japan had a lot of reserves, meaning they had a huge stockpile of uranium just sitting, waiting, going into the reactors, right? And when they shut down the reactors, what are they going to do with this, right? So they started to sell this into the markets heavily. And at that point in time, you had a lot of overhang supply, basically, just getting dumped into the market, driving the uranium price down. Also, at this point in time here, we had the Germany started to also heavily reduce their nuclear fleet. So, and basically, people didn't, they didn't dare to invest into uranium because it was all that, dangerous and all that. But that is the Fukushima gap, and you can see we basically had like a 10-year bear market after that, roughly, right? 10 years we had a bear market. Um, if this went back further, it would look something like this if my, imagination is not, completely lost here, where we had the peak there in 2007. So we actually had a little bit of a resurgence here, and then boom, game over, right? Uranium. So huge bear market. You can see the bear market here. We're trying to bottom here. Still an iffy bottom here, not textbook by any means. Along came COVID. We had a huge collapse. The last single bull in uranium are out, and now we can start the move again. So what you very often see on very long-term time frames, is you see this blow off top here. In this case, to the downside, right? But again, if this was an uptrend, we can invert it. That boom coming back down indicates, hey, that's a blow off top. There is most likely nothing more here, right? We're having a blow off top, we're breaking down, game over, right? But again, here, this is the other way around. So you had a blow off top to the downside, flushing the last few balls, snap back, V shape, and then you are onto the trend there. So that is basically some of the history. I know my good friend Borak, he started to purchase, I think it was somewhere in here, 1918, I think it were, based on that trendline break over here. He might correct me on that, but I'm pretty sure that is true. So what happened, at least personally, I again started to buy upon that break there. It was very early in my trading days, and I bought basically, the run up here. We had a little bit scare here. I remember that. And then we started the rally. So I bought, roughly around here, August, September, October, maybe. I bought most of the uranium stuff there. But anywho, this to me is the start of the bull market, the collapse, and then, we are going the other way. So this right here is the first big wave. This was really funny, by the way. At that point in time, in US dollar terms, I didn't have as much, but again, percentage-wise, it was really funny. We peaked there in 2021. And why is that important? Well, not why that is important, but I keep mentioning the highs of 2021, the highs, because that is, to me, the high of wave one. This is wave one here. Again, elite wave. You could argue, again, as I say all the time, I'm not an expert, but to me, this could be, the big elite wave count up there. And then we had like 2 years worth of pain. You remember this? This was a lot of pain, right? But basically, this is actually a bullish setup. Even though it feels like hell, this is actually a bullish setup. So we had this sideways pennant going on here. And then, to me, there has been two big entries in the uranium market. And big, I mean, where you can actually load up heavily because it's on the longer time frames over here, right? And then you had the next one in summer of 2023. To me, that is the next big entry. You could argue that, this, whoops, excuse me, that this is actually, the entry, right? But again, summer 2023, that is your entry. And then we came all the way to the triangle high. To me, what I'm saying, this is the triangle high because this is a triangle, the triangle high there. The 2021 highs, sometimes they can be very difficult to pierce, these highs here. It all, at least from the way I see it, it all depends on how deep we pull back here initially. And if I remember correctly, I might be wrong on this one here, but also here we have the fib counting, depending on where you're counting. But again, no, this is incorrect. I thought it was closer. But anywho, the fib here, usually if this fib here, the 0.618 is very close to that high. You can see we tagged it there, by the way. That means that there's a lot of resistance here. If we don't pull back as much, again, this one shouldn't be as important. Again, it's a thesis that I'm testing or just looking into if that is really the case. But anywho, here we have summer of 2023, we have the resumption of wave three, excuse me, the start of wave three. So now we are talking, again, wave one here, 2, 3. The number 3 has to be longer than wave one. Again, this is log scale, so this is, a little bit different here. So if we take the measured move from there to there, depending, you can also do it from here. But again, now we're taking the lows. And yeah, meaning that we are at least going to see 80 here in this run here, because this one here has to be longer than that one there. If we take the absolute lows, right, you can see here, roughly this is done very quickly, by the way, 80, right? That is the move all the way up to there. If we only measure from here, which might, it has its merits also, because this is the, the collapse, and then you have, this is the real start of the move. then we're talking 50. And also then you have the 1.618 into the gap fill. Again, makes a little bit sense as well, right? So depending on how you do it. But to me, we are also really close here to what you could call somewhat of a little cup and handle. Look at that right there. The cup and handle, very powerful, very, very powerful setup. You see it all the time on the 1 hourly, the weekly, the monthly, the daily, all over the place. And this is basically a continuation pattern. Not textbook by the looks of this over here, because you're piercing through and coming back down. So it's not textbook by any means, but it is still very solid, right? Very, very solid. So now we can start to do some projections here, in my opinion, to see where this leg 3 could take us. We will take the base from this low here. It could be from this, but from this case, we're going to do it for the most extreme move. And we will start again with the first target that is based up from this this cup and handle here. We take the cup high from there, right? We are talking 40%. We add it on top. So that is our first big target for when we break here. I think we're going to break. Again, I could be wrong, but again, hey, that's my view here. So that is our first target. This little handle here, the depth of it, again, you could argue that, again, it's up here, but for this sake, we have taken that this is the base, or, you know, the ceiling for the cup. Then next on, we can take basically the lowest point of the cup. Excuse me, this is the base of the handle, also the base on the cup here. We take that, we add it on top, and then we will see where does this take us, right? It goes to there. So 55 roughly, 55, 56. That is the second big target. And then you have this whole, what I think is a big Elliott wave in the making here. I've been saying that for some time, something like that, right? Depending on how we're going to do, right? But maybe something like this, yeah. Let's do like that. So we will take the measured move here from the lowest point to the highest, and then we add it on top of, roughly here. Again, some people like to do it from the lowest there. I'll do it from here, from the exit of the flag or the pennant. So again, this is purely illustration. It's not pinpoint exact, but it's just to show you that what I have been saying for a long time, I think, is the 1 to 5 Elliott wave count here. And I'm very confident. And I even said it, a few years ago, that the Fukushima gap will be closed. That is still my take. It is such an important event that I don't see so many people is looking at that gap and say, hey, that is my exit for this whole run up here. And again, what a run. If you enter at like 10, you go to like 100. I mean, that's massive, right? So the Fukushima gap will get closed, and it will probably do it in the wave 5, right? Something like that. Again, don't take this, as precise as it maybe should be. But so we have the first target here, the handle, the second target, 55, roughly there, the cup, and then you have the big measure of this. I call it the saucer because you have like a little bit of like a spoon here. Maybe not, the best view, but then you have the measured move roughly 90. Yeah, with overperformance, again, you close the gap into the hundreds. So again, we're going from 2 digits to 3, always. Not always, but very often that is, big resistance. So yeah, looking further down, again, this is, again, purely speculation, but this big rounding bottom, like, could be a part of a bigger setup down the line, right? Boom. Again, I will exit a lot of my uranium when we get into the Fukushima gap and the highs up there. I'm saying that now, but I will need to see something very different, or very, very different, yeah, if I don't do that, to be honest. But let's see when we get there. But that is my plan, to really close a lot of stuff up here. And then hopefully get an entry, a year or two later again. But yeah, as you can see here, URA here climbing steadily. And these climbs here, they very often gets to the all-time high. You can go back and check other charts again. Again, all-time time for this chart here. Again, it might be higher for the other one if you have the ultimate all-time high in 2007. But yeah, so that's basically some history of the URA. And what I think here we can see, it looks pretty darn good. Yeah, we have, these two fake out highs here. That again, we need to get above roughly 34 will be the trigger for that. We shall see how it goes here, but the good thing is that we had this very scary collapse, but again, huge pullback, like 33%, and then we snapped back heavily. That was very much needed because we lost some pretty important supports. Then we had the whole yen carry trade, taking the extra wind out of it, double bottom, and now we're back up here again. So really excited here, 30 weekly coming up. So overall, to me, we are close to some big moves here. And also some of the stocks here is actually about to break some big long-term trend lines. UUU, for instance, is just looking deadly good. Denison here is also looking, I mean, there's a lot of good ones here in the mix. So yeah, that is my long-term view for URA, some history. And yeah, hopefully, again, this is the monthly. Again, it looks like, look, we are potentially, if we close today, we are at 10-year highs, 10-year and 6 months, roughly, highs. It looks pretty darn good, in my opinion. We also have this whole URA divided by the spot price. That is, really bullish. The spot price itself, I mean, here we have the U.UN looking good, spot price also looking good. There's a lot of good things here, in favor of uranium. And again, it doesn't mean that we're gonna see, what we hope to see, but again, risk reward, all that good stuff, all those fancy words. I mean, it looks good. It looks really good. That's all I have for this little 20 minutes, I think it is 15 minutes update on URA. By the way, note the Fukushima gap over here as well. No, that's not the Fukushima gap, is it? No, that's over here. Excuse me. Never mind. We are above the Fukushima. I'm just getting tired here. We are above. So, and also check out the post that I did on the uranium spot price where I used chat GPT to get, data back from the 1960s, because this one only goes back to 2007. So, and that, again, take it with a grain of salt, but it basically points to that we are going to see 200, 300, maybe $400 uranium. Overshooting could take it even higher, right? But that is what that little exercise is showing. Have a great day, guys. Stay safe. Bye.